Hello everybody, welcome to TraderMerlin Show. It is your Thursday edition. I hope you had a great day. My day was not. I see Richard says, I hope everyone's day was green. Not for the short-term trading. Lost money today, a little bit frustrating, but it is what it is. Can't win them all. Certainly some of the other positions doing well, but yeah, the day trading one is one that sticks some head. It's funny how you can make a bunch of money in other areas like long-term holds and cryptos, and some of these VIHs have been doing really well for me. But you have a little bit of a losing day like day trading, and that's what sticks in my mind. Anyway, all in all, it was a good day. Hope you all did well. Hopefully you got a chance to watch some of the testimony on this GameStop and Reddit stuff, which is just, I can't shake my head in disgust at the idiocracy of our politicians. The fact that these complete morons are in political office just leaves me shaking my head and clearly have no clue of what's going on with this situation in the financial marketplace. I don't know if you guys saw it on Twitter, but I posted this thing on Twitter and it says, if I go into a bank and I rob that bank for, let's say, $10 million and I get caught, I lose all that $10 million, plus I'm going to spend a long time in jail. But if I'm a financial firm and I rob $10 million from either another firm or government or people, it doesn't matter, and I get caught, I'll pay a $100,000 fine and nobody goes to jail. So there's no incentive, and that's what unfortunately was not being brought up here in this testimony today. We'll talk more about that as we progress because I want to make sure we get through our main topic, which is going to be bid-ask spreads. Oh yes, I know some of you going, I don't care about this stuff. Well, it's the result of several questions that all deal with spreads, and obviously, you guys have heard me talk about this before from a risk management perspective on why spreads are so, I guess, so critical from a short-term trader's perspective. So I'll look at it from a short-term trader's perspective. I'll also look at it for different accounts because spreads change dramatically when you move from something like equities to Forex and futures. There's big differences in the way those spreads operate, which is, again, one of the questions. So let me read a couple of questions here so I have at least partial talk track, because as you know, I like to ramble, and I'll try to keep things on path. One of the questions came in from Keith. He says, I've heard different explanations of a scalper. What's yours? Okay, that's a great one, because to me, that is critical with regards to spreads. If you are a scalper, that's where you literally made your money. If we look at the second question, Dave was said, can you do a show on level 2, how to use it, TotalView? TotalView is simply a platform offered by the NASDAQ, which in theory gives you greater transparency into the order books. I may do a show on that at some point, but I just don't see the relevance of level 2 or TradingView at this point, but maybe we can do it down the road. And then lastly, actually that was the main two. And there was one other here about Forex, which I'll get to in a second. So what I want to do, and I apologize for those that know this topic very well, I'm going to start off with the basics of spreads and at least let you understand order filling process, because part of the discussion today was about how Robinhood keeps their platform free. And I don't think that enough people understand that if you're direct access, like a TradeStation or a Thinkorswim or somewhere you're direct, you have so much more power, so much more money potentially going to be kept in your pocket. If you don't have direct access, all of a sudden you're limited in what you can do, and you're usually being taken advantage of, which was part of that discussion today on Capitol Hill, dealing with how Citadel buys order flow. So let me draw some pictures for you. Apologize, I whipped these ones up here pretty quick, but I want to go back through just the bid and the ask. And again, I know we have some new people here, so if you have questions on this, make sure you ask me. I don't want you to fall behind, but it's something that you'll carry with you throughout your trading career, is understanding spreads and how they function. Two things, bid and the ask. These are two common terms you see in the marketplace all the time, and they are extremely important because it tells you what you can buy at and what you can sell at. So I'll explain here. On the bid side, what you have are willing buyers. These are everybody who's basically using a limit order saying, I would like to buy it at a specific price. And as you can see on the screen, it's set up so that the way the bid is set up is all the people put their prices in. They're limit orders. They're all limit orders. And whoever wants to pay the most for that security goes to the top. So you can see here I've got 35.36 is number 1. 35.35 is just below that. And normally they'll tell you how many shares are available here too, but I'm not worried about that right now. I just want to talk about spreads. So that's the bid side. That's our willing buyers who are literally standing out there with their hands out like this saying, I'd love to buy it if you sell it to me at my advertised price, right? I want to buy it at $35.36. I'll stay here until you sell it to me, right? Those are passive buyers. Those are, when we talked about cryptocurrencies, I talked about makers versus takers. These are people who are makers. They're making liquidity. They're providing that, support or resistance in the market, supply and demand in the marketplace. So that's number one. Number two is the other side of the equation, which is the ask price, which is simply all the sellers. And they line up. Whoever wants to sell it for the lowest price goes to the top. You can see here, $35.39 is the lowest price that you could buy it at right now with a market order. So if you hit a market order, you're going to immediately go to where the sellers are lined up. And all of those guys on the ask are willing sellers at their specified price, right? And saying $35.39, I'd love to sell it, but you have to come to me and buy those shares from my inventory, right? So that's the basics of it. A couple other things that are important here. There's these top two prices. For most of you, if you're getting a quote on Yahoo Finance or MarketWatch or MSN, they're going to be quoting you what's called the NBBO, which is National Best Bid and Offer. And you'll see right now the NBBO would be $35.36 by $35.39, making a spread of 3 cents. Now, why is this important? The spread historically was the money that was made for market makers, because before the, well, let's just say late 80s, I want to say it was actually early 90s, we didn't have access to this to be able to route our own orders. So basically it was the market makers stood there and said, well, you can buy it from me at this price, you can sell it back to me at this price, but the difference there is profit for me. It's the risk that I'm going to take as the market maker for this trade. And, you know, it used to be much wider. Spreads used to be over $1. Now they're, you know, a penny, maybe 2 pennies. You see here I have an example of 3 pennies. So I'm going to get you guys to be interactive. I know some of you are going to shake your head and just be bored at this, but I want you to interact here because it'll tell me a lot about how you think orders are processed and how order flow works. So, first example is going to be this one right here. It's a direct access trading account, right? I've now opened up a TradeStation account or Thinkorswim or someone else who offers direct access to the market, which means that you can control your order flow. You can control where it goes. If I put an order to buy, a limit order to buy at $35.36, what's going to happen? Feel free to type it in. I'm gonna quiz everybody today and see if, especially those that don't know this, send in your guess. It's not bad to take a guess at this one. But if you put in a limit buy at $35.36 and you hit the enter button, a lot of people think that you're going to be executed right away. Well, no, you're not, right? You're not going to be executed right away. You're simply going to be line up with all these people over here because there's already people there, right, at $35.36. So they're just lining up. Well, it's not nothing. Something will happen. You're just literally going to join the pool of people waiting, right? And we don't know. It's supposed to be first in, first out on the bids, but I question that sometimes. Tom's correct. You're not going to get filled, or you most likely won't get filled immediately. But you're probably not going to get filled. You'll join these other buyers. So let's look at a different scenario. What happens if I did limit buy at $35.37? You notice now that that's actually in between the spread, right? No, it's not a market order. It's safer in your wallet. Yeah. Yeah, with the market order, you'd be filled instantly, right? So for those that want to know, no, it doesn't matter what platform you use. If you use a market order to buy, you'd be filled at $35.39 or higher or lower, depending if there's shares available, right? FX Green says, wait, then get filled. The challenge with that one, FX, is you may never get filled, right? You could be sitting there waiting for it and waiting, and it just keeps on moving up, and it just doesn't, it's not doing anything. All right, so if you did a limit order here to buy at $35.37, what's interesting, you're still waiting, but watch what happens to the bid side. Because we have direct access, we can now display our orders. When I click this, you'll notice that everything shifted, and now my order, oh, damn it. I love it. I screwed up on this one. I'm going to change this on the fly. Bear with me 2 seconds. I messed up because that shouldn't be 67. It should be 37, right? And there, now it works. So it basically just shifts everybody down. So that guy was at $35.36 at the top. My order is undercutting him. I'm now the cheapest in the world that I'm willing to, or the most expensive price someone's willing to buy. Then I all of a sudden move to the top, right? That's easy. That's exactly. Nick says top of the curtains. Okay, that stuff's easy. Here's where Brennan says, not true. CIBC's platform, they hold your orders and review them. I have seen market orders take over an hour to get filled. Well, okay. If that is the case, then you have to switch, Brendan. If market order should be filled instantly, and it should be filled at that ask price or close. What's happening there is someone's screwing with you. Someone's taking time on that order. And that's probably what Citadel got in trouble for, is they were delaying the execution of the orders that they purchased from Robinhood and other companies because they saw the order flow and they were front running it. That could very easily be what's going on with your CIBC. I mean, I don't know the mechanics, but if you're not being filled in under a second or two, let's just say 2 seconds for a retail platform on a market order, you got to switch. You have to. That's just insane to me. I would be on the phone screaming at somebody if I wasn't executed within a couple seconds. All right, so with the direct access, again, we now have that ability to negotiate. Here's where it gets interesting, and you guys have heard me talk about this a lot. When I did that show for Power Trading Radio, I did a webinar on Robinhood, right? And basically saying, when is free not free? We have this idealized view. Robinhood, it's for the people. Let's democratize trading and investing and make it, accessible to everybody. Oh, this is such a great thing. Oh my God, what they're not really advertising is, yes, you are now available to access these markets and trade 1 share at a time, and some sites will give you fractional shares, but how is it free, right? There is a cost to everything. We talked about this quite a bit, and here's the big difference. If I go to a non-direct access, and it's not necessarily Robinhood, it's others that don't offer direct access, and I do that same order and I say limit buy at $35.36, what happens, everybody? What happens if I do a normal market and I do a limit buy at $35.36 on somebody like Robinhood? Okay? What happens is Robinhood is going to sell that order flow, and most likely to Citadel or another company. When they sell that to Citadel, Citadel can now do pretty much whatever they want, but they are not going to display your order on the bid. You will no longer be negotiating with the marketplace. You are, in essence, a victim of the marketplace, right? So what would happen in this situation here if you did a limit buy at $35.36? Well, you were in the previous example, we would join that bid at $35.36, but that's not the way this works with Robinhood. What they're going to do is they're going to wait for price to change and for price to fall so that the inside ask is now $35.36. So the huge difference here and the competitive advantage that somebody like myself has is a Robinhood trader, if they put a limit order, their limit price to buy has to be on the ask side. Whereas if I wanted to, I could. I'll give you an example. If you look at this screen right now, a Robinhood, I believe so, Salvador, I believe they're selling order flow as well. So in this example here on the screen, if the Robinhood trader does a limit buy at $35.36, they're going to get filled. They'll buy it at this price over here, right? That's probably going to happen right away, right there. But I have the potential, the possibility to go in there and say, I want to try to buy this at maybe $35.32 or $33 or $34 or $35. I could actually save a penny or two on this. So let's say I ended up buying at $35.33. You're thinking, big friggin' deal, Merlin, you saved 3 cents. Yeah, but what if I'm buying 1,000 shares? That's $30, right? That's commission, it adds up. In the testimony today, the comment made by Vlad was that the average order is $2,000 on Robinhood. That's not a lot of money. So for the small little retail guys, it's not that big of a deal. But to me, this is critical for anybody who starts to get bigger as a trader and understands that Robinhood is like driving a 2-cylinder Toyota Corolla versus somebody who's even driving a basic Toyota Corolla with 4 cylinders. I mean, you're really at a handicap. But oh yes, you can now access the markets. So that spread is generally the money that goes into the institution's pockets. It's consider it a risk management fee. Now that said, there are some securities out there that have really wide spreads. For example, would you guys believe it if I told you that I could show you right now a stock that has over a $300 spread? That's a $300 difference between the bid and the ask price. You guys think that exists right now? Like as of this second? I'm curious what you guys think. Most of the spreads, guys, are going to be 1, 2, 3 pennies. If it starts to become over 3 cents, you should automatically raise a red flag and say to yourself, there's a reason why those spreads get really wide. And generally, it's a measure of risk. Now, the things that I do personally to help mitigate that risk is, number one, if it has a wide spread, I don't trade it. Number two, I run scans and filters for liquidity, right? The one that I'll show you here, FX Reen says, yes, Marty. So we got some people thinking that it's out there. I'll show you right now. I was just checking this out because you can actually add a filter to the market or to the radar screener in TradeStation. So here is Apple, right? And you can see right here in this column, I know it's kind of hard to see, but I highlighted it in white. There is a 2-cent spread on Apple right now. Facebook has 18 cents. Now, keep in mind, markets are closed. The spreads right now get really, really wide. You can still trade. You can still go out there and trade Facebook, Apple. You can trade pretty much any stock right now, except to understand that the spreads are really, really wide. Okay? So you can see I've sorted them from smallest, MDT. All right? Metlor Toledo has a $309 spread right now. The ask price is $1,153, and the bid is $844. Now, earlier there was a question about a scalper. What's my definition of a scalper? I was a scalper, as pure as it gets. You guys know that I always talk about how I averaged 550 trades per day back in 1998, maybe 99. And that was pure scalping. Scalping for me was sitting on the bid side of the market, right, and immediately flipping over and selling on the ask side. So what I would try to do here is I would use direct access. Make sure I have direct access here. And I would try to buy at 35.37. And maybe I'd undercut this guy by 0.0001 cents and jump just in front of this guy. And I'd get filled, and then all of a sudden I'd flip over and I'd sell it on the ask. And if I could capture, back then it was called a teeny. For those who don't know what a teeny is, I will see if I can draw it on the screen here. This is market lore now. I'm talking history. A teeny is 1/16. Right? That's what a teeny is. And a teeny equals, oops, I'm going to pen, equals 0.0625. That's what a teeny equals. Sorry for the horrible penmanship. I got to get a better way to write on this thing. So if I traded 1,000 shares of this security and had a 1/16th spread, I'm making $62.50 per transaction. Right? Take out my $10 in commissions, or maybe even 20 depending, and that was my profit per trade. Sometimes these spreads would be quarter point, half a point. I remember days where Microsoft had a full point spread. So that's scalping. Scalping is sitting on the bid, flipping over the ask, and just trying to capture the spread. Now that term has changed over the years, has it not? Today, scalping is really what people believe scalping is today is you're jumping in for something for minutes or seconds, right? A very short trade. And I would say that's probably the most relevant current definition, because nobody is scalping spreads anymore like I did. Now, what you could do, I guess, if you looked at this stock right here, where is it? MTD, you have a $309 spread. That's pretty amazing. I mean, that's crazy. But it's also after hours. One thing you have to understand is when the market closes at 4 p.m. Eastern Standard Time, market orders do not work. Can you guys guess why market orders don't work? Any guesses? I'll tell you. I was one of these guys, and I utilized this significantly. Very, very significantly. It was one of those things where I would find something that had a huge spread, like this MTD. And once I looked at that bid and ask spread of $300, well, I would jump on the bid. Right now, the bid is $844. I would jump out there at $845, $1 higher, and if I got filled, I would instantly try to sell at $1,150. That's $3 lower than anybody else in the marketplace. That's because when I started, market orders worked in the after-hour session. So you'd get some fool that didn't know what they were doing, and they would actually hit the sell button or buy button in the after hours, and where are they going to get filled? Right? They're going to get filled. If you're buying, you're going to get filled on the ask. If you're selling, you're going to get filled on the bid. So I was preying off of these people who really just had no idea how the markets worked. Fortunately, and I think it's the right choice, regulation came in and they said limit orders only in the after-hour session. You cannot do market orders. Let's see. Yeah, I don't, Rob, I think that their retail brokerage firm does. If you use Thinkorswim, I believe you're direct access. I believe you're going straight through. It depends on the broker or the platform that you're using as well. But yeah, their retail stuff, you're just logging into their website at TD Ameritrade. They're selling your order flow. I mean, that's really how that model of commission free, that's how they're subsidizing it. And he even said it today. The Robinhood CEO goes, look, we could not do, we couldn't offer free commissions if we didn't sell order flow. Just as simple as that. All right. So anyway, you could right now, if you wanted to, look at something like, you could go out here and put limit orders and try to, trade these spreads. Right now, AZO, American or AutoZone, has a $129 spread. RE, you got Everest Real Estate Group, $99 spread. So there's some pretty significant spreads out here, even on some of the major names that you guys know. And that's normally a result of, very expensive, high-priced stocks, which is what we're seeing right now. Okay, the other side of this is how do we mitigate this risk? How do I reduce my exposure to a lot of these companies? Well, you can see here, I've got this list built in, right? I don't know how many are in this list. It's probably a few hundred. Yeah, I think so. This was the S&P 500 that I've actually already chiseled down a little bit. So what I would do is I would simply go in here, I'd insert an analysis technique, and I would go to volume average, all right? So you can go in volume average, and that way I can just make sure I'm trading something that has some liquidity over a historical period of time. In this case, I think it goes back the last 30 days. So I'm going to go here, volume average, and double click on that column. All right, and all I'm going to do is take anything out that's trading less. See all these companies? All these really big spread ones, they've got no volume. Liquidity is the issue. So I'm going to take out, by going to about 1.5 million, you can go to 2 million if you want. I mean, it doesn't really hurt to go higher. But let's say we go to 1.5 million. I'm removing 140 companies from this list instantly. And all I'm doing now is trying to keep companies that give me better liquidity. You'll notice the spreads now aren't anywhere near as severe. Let's see, if we probably have a couple big ones. Yeah, there's one or two. AON has a $46 spread, but all the real wild stuff has now gone from the equation. Is scalping easier with crypto? I guess, Salvador, it really depends which exchange you trade through. For example, if you're trading Bitcoin on, let's say, Coinbase is probably the most liquid exchange for Bitcoin in the world. So the spreads, I mean, it's moving so fast and the spreads are really tight that I don't really think that there is an opportunity there. Now, something that was interesting, me and my friend Gary, we were doing this back in 2017. It was very interesting, actually. You could look at the Bitcoin price on Coinbase, the good Bitcoin price on Bitfinex or Binance or another exchange, and they would be sometimes $2,000 or $3,000 off. So back in the day, we would arbitrage those. You would take one coin, you'd send it over to another exchange, you'd wait an hour or so for it to get there, and then all of a sudden you could go and move it back, and you'd make yourself $1,000 or a few $100 on it, just simply the arbitrage from exchange to exchange. But because of technology now, those arbitrage opportunities have shrunk significantly, and the volume has also changed. I mean, we've seen volume spikes for most of the cryptocurrencies. Now, that said, there are cryptocurrencies out there that barely trade, right? That don't have a lot of volume. And every exchange is its own separate ecosystem of volume. So when you read that, Bitcoin traded 100 million yesterday, that's for that one exchange, right? That's not for Binance's exchange. That's for, let's say, Coinbase. So you have to look at where you're trading it to get a sense of liquidity. If I'm trading equities, I'm pretty much getting it all in one centralized location. That's the beauty of having a centralized occasion. Big Eb, no, I'm not in Ethereum. I've been sitting here waiting for it. I agree with you, Brendan. I don't think it's going to crash. I thought it'd have a pullback, which it probably did. It went down to, 1480. I should have bought back in then. It's funny because every day I'm just sitting there going, go, I want to get back in. The good news is I'm holding almost every other cryptocurrency, and those have been doing phenomenally well. Okay, so with regards to bid-ask spreads, obviously this is a cost of capital to you. If you're trading something that's got a wide spread, whether that's a futures market, a forex market, an equity market, if it's all of a sudden a wide spread, just know most likely you're going to be paying that with any sort of market order, and that incurs capital cost to you. Wide spread generally equals more risk, so be careful out there. You might want to cut your share size back so that you don't get caught holding something that might be illiquid. It's happened to me even with just 1,000 shares. No, it was supposed to, I told myself, Big Eb, that I couldn't look at it and get back in for 1 week, and it's been a week and a half now, and it had a couple down days, but other than that, it's just been motoring to the upside, so it looks really, really good right now. Yes, I know. I was right initially, but it just, I wanted to wait 7 days. It was kind of my mental barrier for Ethereum to let that week pass. And initially, it did have a nice sell-off. It went from 1728 where I got out to about 1480. So you're looking at almost 250 points drop. Unfortunately, maybe I got greedy and I just didn't buy back in. Okay, so where's I going? I want to make sure I got all these topics covered because this was it took me a while to get all these listener questions here. So the two questions. Now here's where it takes a turn, and that is when we look at something like Forex, right? Because Forex is a different ballgame. We normally, when we're buying and selling on the futures market, on the equity markets, they're centralized, so we have a bid ask that we can look at. It's centralized, so it's not really going to fluctuate too much from brokerage firm to brokerage firm. If you're trading spot Forex markets, it's very, very different. Okay, and the reason that is different is this. Just like the cryptocurrency exchanges are independent, they're not connected to each other, so it's a fragmented marketplace, so is Forex. So this question came in from Harrison, and I hope you're watching today, Harrison. Harrison says, I've been trading FX with Owanda in TradingView. Do you know who benefits from spread only versus core pricing plus commissions? I feel like the larger you trade, the more you'll get screwed by spread only. Am I correct? I currently am risking 0.5% to 1% per trade on a $10,000 account using spread only. Yes, I do believe that it would be better for you to go to the commission model. That way it's fixed and you're maybe not going to get subject to as much slippage. Now, which was great because Harrison actually sent this in, and I'll explain here in a second what this means. Right here is a list of some of the more common currency pairs traded at Owanda. So I'll circle one here. Let's go Euro USD. Okay, so Euro USD, you're looking at $1.40, or sorry, 1.4 spread only, meaning you're paying just the spread. Or if you want this one, you're paying 0.4 plus their commission. So why is this important? Well, in my experience, if you're trading spread only, there's more incentive for them to widen that spread on you. And they say it's only a 1 pip difference here. I don't believe that. Normally, you're going to see 1 pip or less spreads, but if they're making money off you on spread only, that's who's making the money. So let me explain how this works for Harrison and others. If I'm Owanda, I'm not doing all the trading. I'm getting quoted markets from different banks. So let's say I have 5 different banks that I'm Owanda, and you're my customer. I am going out to other banks, and I'm saying, okay, what's your quote? What's your quote? What's your quote? What's your quote? And what I'm going to do is I'm going to use the best price for myself. I'm going to find the best price that I can buy that currency pair at and the best price that I can sell it. That's my price. You're not going to get that. I'm also going to look and see what's the worst price. And if you're doing spread only, I'm going to find that worst price. And I'm going to give that to you, knowing I bought it at the best price, and I'm selling it to the worst. It's arbitrage for them. They're instantly going to make free money. That's the challenge here, is you're trading against Owanda. Most likely, it's not just, I'm not trying to single out Owanda. This is the difference between big firms, okay? It's big bucks for these guys as they continue to move these spreads. The way core pricing is supposed to work, and I would prefer to go with a company that's an ECN, electronic communication network, because then you don't have the human interaction. An ECN or core pricing says, go out to those same banks, find me the best prices, and give that to the customer. But I'm going to charge you a commission for that. To me, that's probably a better model out there. And it's both, you asked who benefits in that model. It's really Owanda does in both models, right? They don't care. I think that they'd prefer you to be on spread only because they'll probably make more money that way, especially once you trade bigger. So if you think about it, on a full lot, a standard lot, which is $100,000, a 1 pip is $10. It depends on the currency pair, but just in general, 1 pip is $10. So what they're saying here in this is the difference between, on a standard lot, core pricing and spread only is $10. To me, it'd probably be better to go with core pricing. That's just my personal experience. Global Prime, they're an ECN. There you go. Yeah, I don't know about Global Prime. I can't make any comments there, but I prefer to go with an ECN model because they're going to be, you take the human exposure out, and not that ECN isn't going to, trade against your order flow or anything like that. But all right, let me see. There were so many questions came through. There was one good one that came in from Wendy. Wendy says, would you avoid getting into a stock close to earnings? It's a matter of personal preference. For me personally, absolutely. Because you just don't know what's going to happen. You might have I have had experiences in my life where a good friend of mine knew the CEO of a company, and that CEO told him, we're going to blow out earnings. We're going to have killer earnings. So I got this information beforehand, and I did not buy the shares because I was just like, yeah, you know what? That's insider trading technically, and I don't look good in an orange jumpsuit with a cellmate named Bubba. Not my thing. So my buddy bought a bunch of those shares, and sure enough, that company reported earnings and had blowout earnings, huge earnings surprise. But all of a sudden, they missed on some other metrics, and they lowered their forecast going forward. So all of a sudden, that stock dropped significantly. You just never know. Now, that said, sorry, my nose is itching like crazy. That said, Wendy, especially if you're new and you're starting out, stay away from earnings announcements. Watch them because they're very entertaining. Once you get comfortable with your risk management, your discipline, and you know that you can follow your rules, I think there's actually some good opportunity with regards to earnings announcements, predominantly before. Being an options seller before an earnings announcements, the premiums get very, very high. Therefore, as a seller, you want to collect that premium. And you can put them at price levels that are so far away from current price that, if you do get filled, you're probably okay selling, 20% higher than the closing price of yesterday. So to me, selling options become a good one. I actually don't mind buying them either the day of the earnings announcement, like after they report their earnings, because the volatility or the premium just drops out of these things real quick and options can become rather cheap. So I would say in the beginning to be careful around earnings season. You just never know what's going to happen. I've seen great earnings announcements and gigantic crashes. I've seen horrible earnings announcements and the stock just soars. I mean, you just never know. You never know. All right, what else do I got? Should they repeal pattern day trading? I think that they should repeal pattern day trading. I don't think that that's a problem anymore. It's no longer as significant. What I would like to see, I was mixed emotions about pattern day trading. By the way, for those who don't know, pattern day trading is you have to have over $25,000 in your account to make, I think it's 4 round-trip trades in a 5-day period. It's 3 or 4 round-trip trades in a 5-day period, meaning you have to buy it, and let's say you bought the shares on Monday, you sold them on Tuesday. That's a round-trip trade. Right, in one. Let me check here real quick. I was just checking. I told you guys that the power company was supposed to be working in the neighborhood. So if I was suddenly drop, I apologize. They're cutting lines out here right now, so it may not go very, very well. Let's see. What else do I got? If you're already in, would you close a position? Wendy, that's a question you got to ask yourself. To me, it's a risk management thing, and the challenge here is this. Let's say you owned stock XYZ as they go into earnings, and you're thinking, wow, they're going to beat earnings, right? They're going to have a huge beat, and I'm going to make a lot of money on these XYZ shares. And the next day, they tank significantly. It's just, that there's going to be an event. It is most likely not going to be normal. Like if it trades, let's say 1% in a day, you're now going to be looking at 5 to 50% move, and you don't know which way it's going to go. For me personally, I would rather be out than subject to a completely unpredictable action. So I would get out. I don't know. Others, what do you guys think? Anybody else in here? Anybody else? What would you do? I'm going to ask the group here. We get some feedback because we got a bunch of active traders in here. Would you guys carry through a stock to earnings all the way through its earnings announcement? Let's see. Do you think it matters very much asset class you trade? Alan, that's a great question too. Alan says, do you think it matters very much which asset class you trade as long as you practice good habits? I don't. I don't think it matters what asset class. I think that there's a synergy between asset classes. So, I think that if you go and look at equity analysis, you look at technical analysis or fundamentals on stocks, and you master that, now all of a sudden you can add that layer of options on top of that. But if you understand technical analysis, price action, supply and demand, support and resistance, whatever you want to call it, you could now effectively translate that over into the Forex markets, the futures markets. Cryptocurrency, I think not so much. I don't believe it has enough institutional involvement for me to say that there are distinct market footprints left by institutions. Yeah, here you go. So, Wendy, most of the people here are saying no, that they wouldn't carry anything through to earnings. Koja says big no. Here's what happened to me. I've been burned too many times by it. And the unfortunate part is, and I'm hoping that I set the stage here for your situation, Wendy. What I'm guessing is going to happen is you probably own something right now. You're going to listen to this and see all these people here, and you're going to, you know what, I'm going to close that trade out just as a risk management thing, which I personally think would be the right choice to do. And then it's going to report earnings, and it's going to skyrocket in your favor, and you're going to curse me. You're going to come back on the show and be like, that son of a bitch, he told me to get out, and it did exactly what I thought it was. That's just the nature of the markets, right? But you can't look at a one-off event. Look at the grand scheme of things, markets as a whole, your lifetime as an investor or a trader. More often than not, those are just unpredictable gambles, and we're not gamblers anymore. Sharif says, I'd sell 50% and trail 50%. That's not bad either. At least you're locking in something, right? Because you have to know it's a major unpredictable event. All right. GD says, with long-term hold, earnings drop, maybe just the blip on the weekly or monthly chart. Correct. And again, look, that's where I would use options or even setting just straight buy points based off of the long-term charts, right? So let me put that in perspective. A lot of people will be looking at a market and saying, oh, I'm making my analysis off the daily, so I'm going to use those supply and demand zones as something reports earnings. I would probably go out to a weekly or a monthly if I'm anticipating earnings announcements to see where it might really move into, because the price fluctuations are so much more significant on an earnings announcement. No problem, Wendy. Happy to help. Let's see. What do we got? Sorry, I'm just reading through some of the chat here. I'm not sure, Tom, you said is securities lending same as PFOF. I'm not sure if I understand what that means. Rob says, can you explain the uptick rule? The uptick rule is stupid. The uptick rule is a bunch of crap that you really don't need to pay attention to. Okay, here's what the uptick rule is. Years ago, they thought it would be good to help prevent market makers from being forced to buy shares when markets were falling. One of the mechanisms for that is what's called the uptick rule, and I will show you a picture here. Oh, that's actually perfect. I'm going to show you this one here, and we're going to go back a little bit. There we go. So right now, I'm going to kind of draw some things on the chart here as we're doing this one. Just why not? Because we can. I think that chart is going to be this one here. All right, so I'm going to move this green arrow off the screen, and hopefully that adjusts. No, it didn't do it. Dab nabbit. Come on, Merlin. I'm trying to find the one that had the 37 on it. There it is. Ay. Okay, so if we take this price chart of 37, you guys can see the arrows, and let's say it's on an uptick, which is this green arrow here. All right, an uptick simply means that the bid price increased by 1 penny or more. So if it goes from 36 to 37, come on. Now it's an uptick. If it goes from 37 to 36, like that, then it's all of a sudden a downtick. And a downtick simply means that you're not allowed to short at the bid price. That's pretty much what they're saying. It's a way to protect market makers. So if it dropped from 36 to 37, that's a downtick. Or sorry, if it went from 36 to 37, that's an uptick. 37 to 36 on the bid is a downtick. All it is a change in the bid price. That's all they're discussing with an uptick, downtick. Okay? Hope that helped out there. It's something that I had to be concerned with when I was an active short-term intraday trader, but really, honestly, nowadays, it really doesn't make a difference, uptick, downtick. My guess is you'll probably see some regulation here this year regarding short selling, and that could change us even more. Alan G says it has to fall 10% first, right? For a downtick? No. An uptick, downtick is simply and there's interesting because it's actually there were two ways it's calculated. When I started, it was a change in the bid price. So if the bid price moves up a penny, it's on an uptick. If it drops a penny, it's a downtick. And then some were saying it was off of the ask price, the transactions, which I thought was interesting, but I still believe it's on the bid price in that scenario. Okay. Are we in a correction? I don't think so. I don't think we're in a correction at all. I think we're in a momentary pause. Let's go out to your charts here and take a peek at what we got cooking today. It certainly wasn't the best looking day, even after a nice earnings announcement. I don't think we're in a correction. Correction to me would get us back down to 36.50. We can map out the percentage here as well. I probably have snap mode on. Let me turn snap off. 36.50 would probably be a pretty logical pullback for the S&P. And that would bring us to a drop about 8%. I mean, that's not that big a deal at all. Not very significant whatsoever. But No, I don't think we're in a corrective phase right now. It still feels like we're still moving to the upside, although, we have had 3 weak days for the S&P 500. So obviously that's important. It could be the beginning of one, but I don't think we're in one yet. Yeah, Big Ed says, we're pretty much flat over the last 5-6 days on it. So, there's different rules and lines you can put on this market to give yourselves clues. For example, I could draw a line across those lows we've achieved for the past week. Right? They're looking at 38.78 on the S&P. All right, well, if it gets below that, maybe you start building your short position and start adding to it, maybe. But right now, I wouldn't do anything yet. I think you're still traversing sideways. We may go down a little bit lower and then bounce back up to all-time highs yet again. I mean, there's really no reason why this market should implode on itself just yet. Okay, I think I had a couple of questions, but I'm running late on time here. That's what happens on this show. That's all for Big M. All for Big M. Let me go to... There's one that, unfortunately, Larry, I can't go into this one. I don't want to do anything to take away from the education at Online Trading Academy, and I know that you are an Online Trading Academy graduate. He says, could you please do a show on the intermediate time frame of core strategy? Doesn't matter what chart, but I'm getting hung up on trend. What suggestions can you offer on this chart? And the chart that he sent was this bad boy here, which I will bring up in a bigger version so you guys can see it. Basically, it's the micro E-mini S&P 500. And I think you can all look at this. It doesn't matter really what time frame you're going to look at. It's all uptrend. So let me go out to the platform. We'll bring up the at MES. So this is the micro continuous contract. And first thing I do is, if I'm looking at the big picture, I start with the daily, which is what this is, but I will just show you on the weekly as well. You can see the weekly of this is phenomenal. It's just nothing but up, a couple small hiccups along the way. I'll refine down. We'll go into the daily time frame here. Still looking unbelievably strong. I see no reason to change my mindset. I'll go look at the 4-hour. Okay, you're rolling over a little bit, right? It's just starting to show some weakness here. I certainly would be looking at this saying, if you're an OTA person, we'll keep it, I'll just mention the terms on how we get there, but at this point you're pretty high on the curve. So this actually might represent a decent shorting area. The challenge is you don't have any supply. How do you know that this is the supply zone? We have nothing to the left of the chart to really dictate that we are in an overbought situation or coming into supply. You look to the hourly. Yeah, certainly if you're looking at the hourly, which is going to be kind of getting into your intermediate to lower time frame, you're traversing sideways, right? You're traversing sideways at this point. You got to look at that big picture and say, am I comfortable shorting up at the top of this range? If I am, where's my expectation of it going to go? And the challenge of it all is the big picture says we're in a big uptrend. Buy the pullbacks. All right. That's going to do it for me. I got a 3 o'clock meeting, so I'm going to have to wrap it up here. Harrison's, I think trend is an issue for people because we are used to reading left to right, and to read trend, you just need to start right to left. Well, yeah, to some extent. You don't want to, if you're doing right to left, it all depends on how much information you're showing on that chart as well, right? I just want to get a look of the picture, right? This picture for me, I could incorporate what happened back in July and October of last year, but I don't care. It's really just this trend from those March lows. That's the trend. It is totally intact right here. So, Larry, what I would recommend, if you go back into core strategy, there's some videos on core. There's a whole bunch of self-paced, on-demand core strategy stuff for you to check out in my OTA. So, if you go into my OTA, you go to core strategy on demand. There's a whole bunch that talks about time frames, time frame analysis, which could really benefit you. It's one of those things that, we built all this on-demand, self-paced content for you to go back through and say, I don't understand the zoning process, or I don't remember, how we drew segments on price charts. Just go watch the lessons again, and hopefully that will help out. Of course, if you're an XLT member, you can always jump back into XLT, etc. Koja is right. NQ is. Today was a bad day for the NQ, actually. You look at the end result. It wasn't that dramatic, but you saw some technology stuff look weaker today. We did break the lows that we saw last week, which it's not overly important, but at least it's weaker than we saw with the S&P. Now, you do have this kind of double hanging man formation. Those last two candles, because they're on an uptrend, those would be considered hanging man. Not the strongest. It's actually a sign of weakness out there. So I'm kind of curious to see. I think tomorrow we'll probably see some sell-off going into the weekend would be my assessment. What else do I got here? The chart would be difficult for anyone to argue. It's not an uptrend. Well, Simon, you'd be surprised how many times people want to argue. I'm looking for misleading highs and lows. Yep, I'm there. All right. I did not. Did I put anything in? I don't think I did. I may have put something in the. Let me see here real quick. I think I may have done a little bit with economic announcements and earnings announcements. I have some more questions that I didn't get to today, guys, which I'll answer on tomorrow's show. But here's what happened today. This was today's earnings. You can see Walmart. They missed earnings. We're down about 6%. You can see there was a huge beat by Roku, which actually lost money their previous quarter, and they came out at almost 50 cents earnings this time. That's a massive beat, but that's already priced into Roku. As you look at the Roku price chart, I'll bring that one up for you guys. Here's your Roku price chart. That one has been priced in, obviously. It's just been on an absolute tear. Someone was in the know that they were doing really well. That thing has been just going absolute gangbusters. Cool. All right, well, it is Thursday. I don't have any, and I'm glad I got to do the show because I was afraid that my Southern California Edison would have chopped my power and I'd be sitting here in darkness going, sorry guys, couldn't do a show. But glad we got to do one today. Tomorrow is Friday. Yeah, I'll have my short guns out tomorrow. I just feel like these last 2 days have felt like they really wanted to sell off, but there's been a little bit of buying coming in. On a Friday, we might see that erode, but we'll have to wait and see how it pans out for Friday's session. Hope you enjoyed today. If you guys are new, I see a lot of new names in here. Hit that subscribe button. Of course, if you like today's show, click that thumbs up. If there's something you want me to cover for tomorrow, I'm happy to do so. As you can see today, I'm drinking water, but tomorrow, given the way this trading week has been going, I'm ready for a nice cold glass of whiskey. So I'll have a nice glass of whiskey on tomorrow's show. If you have questions for me, feel free to send those in at TraderMerlin@gmail.com. That's the easiest way to get in touch with me. You can send in questions, comments, suggestions for the show. Any guests you might have that you want to have on, send them in there as well. And then tomorrow, I actually am going to be giving you guys a pretty good list of guests for next week. One of them, I believe the guest for Tuesday, is calling me from Singapore, and he is probably one of the more famous investors out there. We're going to have Jim Rogers on the show, which some of you might know Jim Rogers. That show, though, I'm going to have to pre-record. So what I think I'm going to do is I'm going to record the show, and I'm going to do it as a premiere, so it happens right at 2 p.m., and then I'll be in the chat with you guys moderating along and doing that type of stuff. But that's the only way, because he's 16 hours ahead of me. Makes it very difficult to do a show for him at 3 in the morning or something. Anyway, that will do it for today, everybody. Thank you so much for joining us. Hope you enjoyed it. Again, click that thumbs up, and I will see you tomorrow. Send in your questions so I have something to talk about on tomorrow's show. Cheers. See you then.